Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Crypto markets are grappling with a stark divergence between operational stability and shareholder value erosion. One public crypto firm has finally achieved break-even status on its token rewards program, a milestone that should theoretically signal operational maturity. However, the underlying financial health tells a more precarious story. The company is currently sitting on a $50 million paper loss, a drag on equity that investors are watching closely. The immediate threat is not liquidity, but dilution. Approximately 33.5 million warrants are becoming exercisable in the near term. If fully exercised, this mechanism threatens to dilute existing shareholders by 66%. That is a massive structural overhang. It suggests that while the business model may be sustainable, the capital structure is fragile. Traders are pricing in the risk that future equity raises will be necessary to cover these obligations, potentially suppressing the stock price regardless of token performance. Meanwhile, traditional safe havens are under pressure. Gold spot prices slid 1.7% to $41.36, a sharp reversal that underscores the market's shifting expectations regarding Federal Reserve policy. The catalyst for this decline is fresh CPI data, which registered at 332.568. This figure has intensified speculation that the Fed may delay rate cuts, or cut more slowly than anticipated. When inflation data remains sticky, the opportunity cost of holding non-yielding assets like gold rises. This dynamic is rippling through precious metals broadly, impacting both platinum and silver markets. Investors are rotating out of metals and back into yield-bearing assets, betting that higher-for-longer rates will strengthen the dollar and weigh on commodity prices. In the banking sector, uncertainty persists for Digital Asset Acquisition Corporation, DAAQ. The SPAC has delayed its merger vote with Old Glory Bank until August 14. The postponement comes without an explicit public reason, but the underlying issue is clear: Old Glory Bank remains undercapitalized, falling below critical regulatory thresholds. This delay highlights the ongoing regulatory scrutiny facing digital asset-linked financial entities. Investors are left waiting to see if DAAQ can find a way to recapitalize the bank or if the deal will collapse entirely. On the macro front, currency markets are seeing coordinated intervention. The U.S. Treasury Department has joined Japan in intervening to support the yen. This marks a rare moment of alignment between Washington and Tokyo, aimed at stabilizing the currency amid rising volatility. Such coordinated efforts often signal that central banks view current exchange rate levels as disruptive to trade balances. Finally, technical infrastructure remains a wild card. Cloudflare security systems recently blocked a request from IP95.70.233.109, an incident that coincided with heightened market volatility. While the direct market impact is difficult to quantify, it serves as a reminder of the fragility of digital trading infrastructure during high-stress periods. Analysis of current S&P 500 and BTC technical indicators suggests that any further outages could exacerbate existing downward pressure on risk assets. That's your market briefing. Follow Rumour with AI for daily market intelligence.